good afternoon, good evening, good morning, wherever you are in your time zone. Welcome to the latest in our regular series of BTRM webinars, Certificate of Bank Treasury Risk Management, a somewhat unglamorous name for what is nonetheless a very important topic that we all have interest in, that is bank balance sheet management. And that subject covers a wide range of features and factors within the financial markets, which is why the webinars that we present cover such a wide range of topics. And what a topic we have here today. It's my pleasure to welcome Susan Keating, who is CEO of Board Risk Committee. That is a non-profit membership-based organization that focuses on risk management. So I suppose one would call it a professional interest association. And Susan has a stellar career going back 35, 40 odd years, a stellar career which included time as the CEO of a US-based bank called Allfirst, which was part of a Irish group entity called Allied Irish Bank, and they're in the papers, for not such great reasons, because they were subject to the activities of a rogue trader. I always that makes a person who is engaging in criminal fraudulent activity sound a little bit more glamorous than they really should. But the way she dealt with that has really cemented her reputation in financial markets ever since. But subsequent to that, she's worked in a wide range of fields within financial markets. The role of the BRC, of course, needs no real introduction insofar as they are also looking at an important topic. And it is our pleasure to welcome her today. She's going to talk to us about risk management generally, risk culture, and what are the current areas of focus for anyone involved in bank risk management, or indeed financial markets risk management, in today's somewhat uncertain and volatile environment. I suppose that is an unarguable statement, is it not? Great. So here we are then. So my name is Professor Morad Chowdhury. I will be hosting the hour's proceedings. I'll be handing over to Susan very shortly. She's going to do a short presentation, and then afterwards there will be plenty of opportunity to ask questions and debate the topics of the day that she has raised for us. And we will hard stop on the hour, so that will be 7 p.m. UK time, and of course that will be precisely 56 minutes from now, whatever time it is in your time zone. So thank you again for joining us. Thank you wherever you are. Thank you for joining this latest BTRM webinar. And Susan, thank you from us for taking part and giving up your time to talk on this very important topic to be for BTRM on our behalf. Really welcome. Great to see you here. And may I hand over to you? The floor is yours, as they say.
Well, what a pleasure. And thanks to you, Morad. Oh my goodness, I have learned more and more about BTRM, and I'm so impressed with all the work that you're doing. And I'm delighted to be part of this presentation today. I actually have a few slides that we're going to put up on the screen. And as Morad said, I'm going to take you through some experiences that I've had, some of the learnings, and some guidance perhaps on how we might best manage risk going forward. So let me start out by saying we're going to talk about building and developing a best-in-class risk culture and internal processes to ensure credibility, reputation, survival. All right, so let's move on to the next slide here. Okay.
Can you give me control?
You should be able to take control if you can. Do you have the? Oh, no. Sorry, technical problems.
Sorry, I do not.
Come on, Ed.
Okay, that goes well. I'll tell you what. I will move on to the next slide then.
Thank you.
For the moment.
So our next slide actually talks a little bit about what the BRC is all about. Let's go back to the other one, folks. Slide 2. Okay. The Board Risk Committee, no, what is the Board Risk Committee? Again, Morad sort of made the introduction, but this is a very important organization that focuses on all aspects of risk. We have a peer community that gets together and we talk about these issues, whether it's AI, cyber, ESG, business resilience, geopolitical, and so forth. So I'm very pleased to be part of the BRC, and as Morad said, it's been my career journey has been quite a journey. So let's move on and let's get into it. We go to the next slide. All right, I'm really delighted to be able to share with you my perspectives on what a best-in-class culture and risk culture and internal processes need to be in order to successfully manage your organizations. And as Morad said, today more than ever, we're operating in a world that is changing at an unprecedented pace. We have risks, we have new threats that are taking us well beyond past experiences and testing our knowledge. In fact, today's CEOs and senior executives have to own being corporate risk managers, which is sort of an interesting proposition, if you will. Basically, everyone needs to ensure a robust risk framework within the organization, marrying strategy, business strategy, to operating practices while assessing risk rewards and making decisions relative to risk tolerances. So organizational leadership must be actively engaged in the development of risk awareness, analysis, and reporting. With the complexity of global business and expanded geographies, again, Moritz in the UK, I'm here in the US. I mean, we're operating in a global environment. We're expanding geographies. We have technological advancements. We have new business ventures. All of this defining, much less managing risk at a corporate or divisional level is more challenging than ever. So today's geopolitical realities, we have the possibility of war and terror events and floundering economies, as we've kind of seen what's going on with the tariff wars, making a comprehensive definition of risk even more elusive. The potential impact and consequences associated with these diverse threats are enormous. We can't eliminate the threats, but we must factor them into our risk management approaches. Senior leadership must be intimately involved in assessing and managing risk and must utilize people, process, and technology in more structured and integrated ways. So we have to forget compartmentalization and silo management, which still exists in many organizations. Most importantly, senior leadership must not assume that risk is for others to deal with, such as auditing, compliance, and legal. In fact, the only way to eliminate risk, as we know, is to shut it down, but with senior level commitment, communications and understanding, best-in-class processes and culture can be developed, which will reduce vulnerabilities. The objective has to be to create an environment that minimizes opportunity for a breach or failure. But since a failure can or will still occur, a process must be in place so problems can be identified early and elevated appropriately to senior management and oversight committees. The ability to move quickly to a well-developed crisis or contingency plan is critical. So top management understands that a key mission of every organization is to protect assets and ensure safety and soundness on behalf of the stakeholders. But this concept must also be understood and owned by every individual in the company. When assets are mismanaged, institutional credibility, reputation, and survival are at issue, and each and every employee is impacted. It starts at the top, but must be part of the culture of the organization and written into job descriptions of every employee. So just to give a little bit more kind of background, I spent 29 years in financial services, and as a relatively new CEO of Allfirst Financial, uncovered and managed through what was then the largest fraud in US banking history. We were defrauded by a rogue trader who'd been defrauding the company for 5 years, and we were defrauded in the amount of $691 million. I think we should move to the next slide. Okay, one more slide, folks. We talked about this. Next slide. Thank you. Okay, so Allfirst Financial. Following my financial services journey, I did work for a nonprofit in Washington, D.C., and at that time became very focused on and basically committed to ensuring good governance and risk management in companies around the world. As CEO of Women Corporate Directors and now CEO of the Board Risk Committee, the focus was and is on governance. So next slide. So some background, next slide, please. Okay, some background on the Allfirst ride so that you'll understand why these issues are burned into my psyche. Let me describe a day in my life as a CEO. It was 2002, and I had just reaffirmed the strategic direction of Allfirst Financial with our US and our parent company, Allied Irish Bank. Talked to the boards, shared with them, I've been commended by the boards for the positive double-digit year-end earnings. I had talked through revenue challenges for the coming year, laid out specific plans for aggressively managing risks, and across the company outlined plans for cutting costs to offset projected revenue shortfall. Does this sound like what many of you are doing today? So I headed out of the office to meet with one of our top customers, and actually was right next to the elevator when I was called back by my assistant. She'd gotten a call from our chief risk officer, who insisted that he meet with me immediately, and also have our chief legal officer and the head of treasury join us. I have to tell you that in my 29 years in the business, I had managed a lot of problems, a lot of crises and so forth, but this chilled me to the bone. It so happened that Allfirst Financial was defrauded in the amount of $691 million. It was a complex, unbelievable, intricate scheme perpetrated by one individual over a 5-year period. Unbelievable? Absolutely. Incomprehensible? Yes. Tragic? Incredibly. One rogue foreign exchange trader seriously violated a 150-year-old, well-respected $18 billion financial services institution, precipitating a crisis that forever tarnished the company and the lives of many people employed by or associated with it. Eugene Ludwig, a former comptroller of the currency in the US, he was hired to conduct an independent investigation into the circumstances of the fraud. He came into my office, he'd been there not long, and came into my office, and he said to me, "Susan, you were mugged." He said, "You were mugged." And we were, by an incredibly bright, creative, masterful, and arrogant employee. Now, I want to just shed a little light on this employee. He was a father of 2, served on the board of the parochial school with his children. He had actually been covering, he did not receive any of the $691 million. He was covering his losses as he was doing foreign exchange trades in Asia. And basically, his only financial benefit were the bonuses that he received at the end of each year during those years that totaled about $650,000 over the 5-year period. But this incredibly bright, creative, and masterful, and he was arrogant employee kind of pulled this off, if you will. So hindsight and the results of the investigation revealed that there was situational opportunity and systemic weaknesses to our risk structure that the perpetrator recognized and capitalized on. And by the way, I believe this possibility exists within most companies today. This rogue trader operated beneath the radar screen of our policies and controls, breaching and manipulating them to his benefit and intimidating and bullying employees in other areas that question some of his unorthodox practices. So I want to share some of the learnings, and it's interesting. So this fellow's boss, by the way, the head of Treasury, had been sent to the US by Allied Irish Banks. He was a very well-respected executive within the parent company. And he was one that under his, he spent most of his time golfing and kind of out doing other things. And basically this fellow operated in his department, pulling off, again, this whole situation, this fraud. So let me share some of the learnings, and I'm going to focus on three key areas: people, process, and technology. And one of the things that, as I summarize kind of what we learned at Allfirst, you'll recognize kind of the flaws in these categories. So let's move to the next slide and let's talk about conclusion number one. So the first conclusion is that management at the US subsidiary and at the parent company underestimated the risk associated with hedge fund, sort of, if you will, foreign exchange trading. The small size of the operation, and it was very small, and the style of trading produced potential risk that far exceeded the potential reward. From a management perspective, the area was small in terms of expected profits and formal risk limits, and not a part of core business activities. So it was not given top-level scrutiny that it should have been, and it deserved. The point here is strategic, kind of periodic reviews by business and the incorporation of a thorough risk assessment of business activities has to be mandatory in any area, in any business. What is the nature and the future of the business? How is it changing? What is the revenue contribution and potential? What are the potential risks? How can the risks be mitigated? Is the business core? And if not, it should be flagged and put through even more rigorous cross-examination. The second key conclusion: the control processes in place intended to prevent such a fraud failed. This was actually human error resulting from a manipulation by a bright and clever individual who had a firm grasp and influence over systems and procedures. The perpetrator was able to devise devious ways to obscure risk positions and profit and loss. Further, he took advantage of weak and inexperienced employees with very aggressive, intimidating, bullying behavior. And that was actually accepted and encouraged by a supervisor. So structured and careful analysis and review of each element of the business might have uncovered some of the failures. Again, an activity flagged as non-core, high-risk business should require that internal and external audits are more comprehensive and detailed and conducted more frequently. Conclusion number three: information gathered and reported was not at the level commensurate with the risk. This is alarming when considering that the loss potential was growing as time passed. Actually, the ALCO committees of both the parent and Allfirst were relatively advanced, and reporting was considered to be in the best in practice category, according to regulators, both in the US, in the UK, because we had AIB had position in the UK and also in Ireland. So they were considered best in practice, according to the regulators, in many respects. However, the right information wasn't being reported with respect to the foreign exchange trading. None of us recognized that, including two very well-regarded CFOs. Next slide, please. The Treasury division was siloed organizationally and matrix managed between Ireland and the US. Again, keep in mind my point that the head of Treasury was an Irishman who'd been sent over to the US to run the Treasury division. So what this did, this silo, this kind of matrix management, created an information vacuum outside of Treasury and a unique operating culture within, with management accountability and oversight not up to the same standard as elsewhere within the company. Add to that a misplaced reliance on the competency of the Treasury executives, and here we were. He had extensive experience. He was sent actually to the US to build out an FX trading kind of arm of the US subsidiary. So my point here is that substantive competency does not necessarily translate into effective risk management. So, and I'll say several key points here: no division, and I repeat, no division can be an island within a company. Integration and uniform practice simply has to occur. Further, most financial services companies practice some form of matrix management in its own right can be very effective. However, and this is big, accountability and supervisor responsibilities must be absolutely clear. The fifth conclusion, Treasury audits and exams were inadequate. So diligence in reviewing and later following through and elevating problematic issues was spotty. Part of the problem was that the auditors lacked sufficient understanding of the FX business specifically to do the analysis required for these specialized areas. Relative to control deficiencies, no single control deficiency can be said to have caused the entire loss. It was a series of lapses and weaknesses. Interestingly, the investigation proved, and this is absolutely found fascinating, that had the auditors included even just a few more transactions, the probability of detecting a bogus one would have increased dramatically. Here's the point. Checking one more option would have increased the probability of finding a bogus one to about 75%. Two would have taken it to 86%. So given the complexity and nature of businesses the financial services sector is conducting, the proper hiring and training of audit and compliance personnel is absolutely as critical as the hiring of the people with expertise to run those businesses. In addition, an experienced and well-established risk committee of the board to oversee risk throughout the company is essential. Now you can see why I have such a passion for the board risk committee, the organization I'm currently affiliated with. So, learning and conclusion number 6, the boards, audit and risk committees and management assumed that the review and control processes were sufficiently robust. The top-down strategic business and risk review that I described earlier must get done. Further, it needs to be seriously reviewed and challenged by the board, the risk committee, and the executives. In other words, corporate governance needs to operate at the very highest levels, particularly as it pertains to risk. Support for business activities and agreement on risk tolerances are also important. Reporting consideration of identified hotspots, if you will, as well as active dialogue about emerging trends and new risks should be standard agenda items. And again, with the volatility in the dynamic world that we're operating in today, this is critical. So the 7th key learning here, conclusion, the culture in Treasury was unique. It was a top-down management style of command and control that could be intimidating and abusive, and it became a breeding ground for the likes of John Rusnak, the rogue trader. Ensuring open communications throughout companies and among all levels is not just good business, it's an imperative. Despite tenure, experience, and contribution on the part of any one individual, intimidation and bullying cannot be tolerated. If a healthy, progressive risk culture were in place, where every employee understood his or her role in being corporate risk managers, someone might have elevated and reported some of John Rusnak's unusual activities. Suspicious activities must be surfaced, and all employees must be empowered to do that. And I really believe this kind of environment can be achieved without creating a mistrust among colleagues. Well, Allfirst came through what I call the event, still deemed as well capitalized by definition, and in the quarter following recognition of the fraud was reporting earnings. The final chapter, however, is that Allfirst was acquired by a U.S. M&T regional bank. So although value impairment was a possibility for a time, the strength and resiliency of the company, an obsessive focus on holding on to customers, and I spent a lot of time going out and reaching out to our customers and communicating and explaining what had happened and what we were doing about it, and also with our employees, and also with very serious support from the parent company. Allfirst got through it all. But no one living through that experience will ever think about risk kind of the old-fashioned way. I certainly haven't. So I urge you today to reconsider your thinking about operational risks. And let's move to the next slide. Thank you. We all have the privilege of working on behalf of our stakeholders. There's no room for complacency or taking anything for granted. In the world in which we live, we have a choice between value destruction and scandal on the one hand, or protecting and increasing shareholder value on the other. The real success stories in the future, just as it says on the slide, will be companies that are able to strike the optimum balance between growth and risk-taking. It's also about strategy and business practice, risk and reward, and basically making the right calls. It is thinking broadly and creatively about the future, considering the people dimension, implementing appropriate processes with a vengeance, and investing in technology and better information systems. Information is key, and although expense management is high on everybody's list and agenda, any cost saves can be quickly consumed with one event or business failure. So Morad, I'm going to turn it back to you, and just let's see here if we have questions or you have some thoughts of some things that we might kind of dig into further. Next slide, please.
Susan, thank you so much. Gosh, there was a lot there. That was certainly not a long presentation, but there was so much in it. Gosh, you know, I could have a separate webinar for just about every bullet point you've raised. Not that I want to worry about that. So thank you very much for that. There was a lot in there. I see a comment on the chat, but no questions, but that's okay. I've got a fair few of my own. Just the experience of dealing with quite a terrible incident over many years in itself would be a significant war story in anyone's career. Obviously, as you said, with the Allfirst experience, you were able to manage through to it remained viable because lesser level of loss would have sunk many institutions, and you were able to maintain it as a viable institution. And then you said it was eventually taken over by a US entity. Now, while I'm waiting, that we have a question on the screen, but before I go to that, and I urge the delegates to have a think about what was raised by Susan and share their opinions and views. Before we get to the question on the screen, I was particularly interested in your description of the individual's personality traits. How should we put it? They weren't necessarily the most attractive personality traits that one might wish to observe in a co-worker. And my question was along these lines. You notice that I've obviously had amateur training in diplomacy in my choice of words, but I'm wondering if, you know, you mentioned culture, quite rightly so. It's an area of focus. You mentioned culture, risk culture, but wider operating culture. I wonder if banks around the world really need to look at the type of individual that is elevated into positions of senior executive authority. You noted that this individual's behavior was tolerated, and I'm not sure if you implied it was encouraged even by his supervisor. Now that suggests to me an operating culture at the senior level that simply isn't appropriate when one remembers these are banks. We're part of society, we're part of the community, we're here to assist societal development. I mean, ultimately, what's the role of a bank? It's to ensure that financial markets can assist in the growth of the economy to the benefit of society, the benefit of citizens. So I wonder if the recruitment culture, the way we identify individuals who we want to put in positions of responsibility and elevate them into senior positions of executive authority, I wonder if that needs to be addressed, because I see lots of text about bank failures. I see lots of analysis, lots of publications, lots of commentary about bank failures, but I don't see as much as I'd like to on what sort of people are we recruiting to these firms and elevating to. What's your view on that?
Well, first of all, obviously in financial services, the complexity of the business has grown significantly. So I think a lot of the hiring has to be on technical skills, knowledge, experience, and so forth, and that's incredibly important. However, there has to be an opportunity to ensure that that individual, that executive, that employee coming into the bank and to the organization has the kind of interpersonal skill, if you will, in working with colleagues, customers, associates, and so forth, to get along and basically kind of be effective. I mean, there's no question that the head of Treasury, it was top down. It was, I mean, what he said kind of went. I mean, that was the word.
Yeah.
And the bullying was tolerated because that was just kind of how it was. And people would say, oh, that's just Treasury. Well, it's not just Treasury.
Yeah,
Well,
exactly.
it's not just commercial lending. It's not just commercial. So I do think that hiring for expertise, skill level, but also interpersonal skill is critically important today, and it has been for some time.
Very good point. You say, "Oh, that's just Treasury." I've experienced that myself. I mean, and I'm not a fan of that culture because I mean, I've been a treasurer of banks myself with a P&L target, and I like to consider that I'm a nice fellow. But it's that we need to get away from this view that, oh, well, that's okay, that's how they do things there. Now, I've got a thank you for that. I'm with you 100% on that. I've got on the screen. We have a question which is very topical actually because it's been getting some critique over the last few years. The question is, can you share your views on the 3 lines of defense, the concept of 3 lines of defense? Could this also be an area that, I mean, is it still fit for purpose? What are your views on the 3 lines of defense framework? You know, first line, second line, third line. What are your views on that? This is from Maro, one of our delegates. And do you think that's maybe still fit for purpose, or is it potentially a cause of failure because it's not sufficiently robust? Or what are your views on that?
Well, I think the 3 lines of defense is certainly an appropriate kind of risk management approach. But I would also come back and say, you can't simply rely on that. I still say kind of beyond that, there just needs to be a very kind of dynamic environment that is looked at and reassessed and concerned and reviewed. What are your thoughts, Mort, on that? You're very much into this.
Well, I don't want to be too controversial because in many countries, including the UK, but in many countries, the bank regulatory authority, the supervision authority, they expect to see the risk management framework of the bank couched within the 3 lines of defense concept. So it wouldn't really matter whether I was the biggest fan of that concept or its biggest critic. It wouldn't really matter what I thought because the regulatory authority expects to see it. So notwithstanding that, again, diplomatic answer, I would suggest that there is a lot to be said for it, as you said, but again, you said we can't rely solely on that. I think what's important is that we try and avoid as much as possible any silo mentality. In fact, It was on your slides. One of your points said the risk management is, it implied it explicitly. Well, in fact, it wasn't implicit, it was explicit. You said it's not the role of just audit and compliance and risk to manage risk. No. We're all risk managers. And that, I think, is away from the concept of 3 lines of defense. When we say, look, we're all risk managers, it doesn't matter whether you are selling loans, we are originating loans to a corporate customer, or you are a trader, or you work in compliance. We're all here to manage the balance sheet to make sure the bank is viable. And I think that is the key when I think you and I both are happy with that as a concept, but we need to understand that there's more to it than that, more to managing a bank to maintain viability. And I think that's where we need to address potential drawbacks of the concept, because it may encourage, whether by accident or design, it may encourage a silo mentality. So, but I share your view on that. Now, there's another question here. In fact, there's a few coming up here, thick and fast here. So thank you very much. I'm not sure which. I'm going to go with this one. I'm going to go with you. said that post the event, when you found out about what had happened and you were managing the crisis, you were saying you made changes to people and processes and approaches on risk. And the question from the delegate is, can you share some specific examples of changes that you made or initiated to people and processes and technology that you implemented to address the gaps that have been exposed when you discovered this fraud? Was there any specific, can you highlight some specific examples of changes you implemented?
So the people side, I mean, I think we had the skill, the technical skill in place from a people perspective. We didn't necessarily have the interpersonal skill in place with those individuals. So on the people side, I think it's really balancing out, just as we were talking earlier, kind of experience, know-how, technical ability with just the ability to work as a team and to operate within a culture of a company. So that's people, but processes, what's interesting, we found that particularly in Treasury, they were operating kind of an island in their own right, if you will.
Yeah.
And there wasn't a lot of double checking on the transactions. And again, what happened is that when another colleague would question John Rusnak about something that looked a little odd, like why all of these transactions, kind of overseas, if you would say Asia, they were actually, it was interesting. He was pretty active with Japanese yen. He was going back and forth with Japanese yen. But when others questioned him, he just said, "You don't know what you're talking about." What?
That old chestnut. That reminds me of long-term capital management. I don't know if you have history of that. That's always a giveaway. That reminds when a potential investor questioned long-term capital managers, theory and why you think it's going to work, and they said it's because of people like you who don't understand it that we're going to make money. Now, famous last words. I mean, they not only did implode. If it hadn't been for the Fed bailout, who knows what would have happened. That's a really great anecdote. Thank you for sharing that. Always be wary when someone points to lack of technical knowledge for not being able to follow something. Oh, you don't understand it. We're the experts here. I'm always wary of that. If you can't explain something simply, then you're the one that isn't the expert. That's a good point. So it was more about addressing the culture of the firm. I think I take away from that, Susan, than necessarily saying is that correct?
That's correct. But I would also come back. The third kind of area there was technology.
Yeah.
And certainly we had a solid platform system, technological system. But one of the things that we found is that the reports that came out and what was shared and kind of was part of the technology framework and reporting wasn't as robust as it should have been. So we actually went in and made some serious changes to our data systems, if you will.
And did that require a lot of time and resource, money, or was it something because that sort of thing couldn't be fixed quickly, could it?
Not quickly, but there were some quick fixes. But other than that, we actually had a multi-year plan. But ultimately, when we ended up merging and selling to M&T Bank, they just basically took it and absorbed it within the other regional banking company.
Okay, thank you. Now, I like this question from Claire. Thank you. This is also very topical. In your experience managing Allfirst through the crisis that tested the entire organization, what were the most critical decisions you made in the first 72 hours? In other words, and in fact, Claire follows up with, what advice would you give current, well, she says CEOs, but I would suggest any senior exec, whether you're CEO or not. What advice would you give current CEOs and senior execs about leading effectively in the earliest moments of a high-stakes corporate crisis? So in your personal experience, what do you think were the most important decisions you made in the first 72 hours? And today, what would you suggest, what advice would you give to someone about what to do in the very earliest moments of a crisis?
So I surprised some of our executives in that I said, we have to immediately call in all of our capable auditing folks from the parent company, from the US company, and we have to figure out the size of the fraud. Because all I knew was that we had a rogue trader. There were some very suspicious transactions and that he was likely defrauding us. And we actually, and thankfully for the parent company helping, we had several conference rooms filled with auditors going through transactions. And within 48 hours, they were able to say it's a $691 million loss over 5 years. And we, on that end of that second day, had a board meeting, shared all of the results with the board that were obviously, they were stunned, and immediately followed that next morning with my going live to the news and breaking the news about the fraud. And a funny little anecdote, my sister happened to live in Chicago at the time, and she was at a sports center and watching TV, and all of a sudden she said, "Oh my God, that's my sister on TV. What's going on?" And that's how my sister and my family, some of my family, found out that I was overseeing a fraud situation at the bank. But I think, understanding, number one, what you're dealing with and sizing the crisis as quickly as possible. And then secondly, very transparent communications, because once I had told the board, went live, and we, by the way, before we went live, we had a major employee meeting and shared with the employees what had happened. But as soon as we went live, I had a whole game plan that went for weeks, where I met with customers and groups of customers, shared what had happened, answered questions, and so forth. And I think that transparency and that communications helped us from losing, and having people kind of line up at the branches and, take their money out and just, we didn't end up with a run on the bank because of it.
Yes, because of that critical early action, including your communications, you prevented a run on the bank. Because if people had seen a queue of people outside the branches, that would have killed it straight away, right? So that's actually that's a vital reaction. Okay, thank you. I think. Oh, sorry. Your advice today. The second part of the question. Your advice today to someone. What are the things to consider on the first, few hours of a crisis, or the first 72 hours?
Well, first of all, take a deep breath. And
Good advice.
Make sure that you've got legal, that you've got auditors, and that you've got compliance, in the room, and communications, and figure it out together. Get your team together and kind of move it forward. So one of the things I was going to mention, Maura, if you look at some of the other bank failures that have occurred, they haven't gotten out front with the communications.
Yeah.
So you start losing customers, you start losing employees, and the credibility of the organization fails, rather than just saying, we know what we're dealing with, here's what it is, this guy was masterful, but blah, 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 blah. And by the way, I'm so curious, nobody's asked what happened to this guy.
Gosh, yes. Well, I would have thought they stuck him in jail and threw away the key, but what did happen to the fellow?
He was in jail for 6 years. He was in jail. But he ended up, when this started going live, he actually ran away from home, holed up in a motel, hoped nobody would find him. And the police were all over. There was kind of a manhunt trying to find this guy, found him. And as I said, he ended up serving 6 years in prison.
Okay, I mean, the wheels of justice were served, I suppose. Well, there's no suppose about it. I would suggest they were. It's debatable whether 6 years is too long or too short for white collar crime, but that's a whole separate debate entirely, which I'm not going to get into here. Now, that's very, very, very valuable. Thank you for that. Now, actually, that touches on Jasvinder has made a comment about what are your thoughts on involving audit teams early in the life cycle of critical operational processes. That's his words. Now, you've already said that it's important to get them in the room straight away. So that was your initial response: audit, legal and compliance, and then get a team view on it. But what about when we are reviewing processes, almost turning 3 hours of defense on its head, really, rather than getting audit? This is my takeaway from his question. What I read into his question is, rather than getting audit involved post a process, reviewing of the risk process, reviewing of the money laundering process, reviewing of the customer onboarding process, reviewing of the ICAP process, or the review and approval of the ICAP, rather than getting them in post the process has been set up. My take on this question is, should they be involved at the start so we get more of a control input into what processes should look like, rather than post the formalization of the process? I think that's what his question is. Jasvinder, if I've misunderstood your question, please clarify. But what do you think of, at least my question, if it isn't the right one, do we think it's more about turning large events on its head and getting audit involved to review processes before they're finalized rather than after they've been in operation?
Well, I think it is helpful to get them involved early, but not so much that they're kind of taking over the process. In other words, I think they should have a voice and then exit and then come in as is a that's my people may differ in terms of views of that.
Yeah, okay. Yeah, absolutely. Because I imagine the business lines would say, well, to your point, they can't be controlling it because it's audit. But I think getting their input to it, which is why I always think ALCO, which, by the way, comes I'm your biggest fan on one particular chapter you wrote many years ago in the Wiley book. I'll come to why I'm a big fan of that. But that's why I always think ALCO, Asset Liability Committee, the attendance of third line defense there, to me, makes sense, because they're meant to be experts in process and process efficiency. Surely they have an opinion on something. So they're not voting members, so they're still independent. But that's connected with your viewpoint. I think that, yeah, they should be involved, but they wouldn't be front running the process because ultimately they're not the business. Now, there is one more. Go on. Yes, sorry.
And that gets back to this point that I made earlier about balancing the risk and the reward. because if audit and compliance, had their way, there would be no risk taking at all.
Well,
And
we wouldn't make any money, right? None of us would have a job.
Exactly, it would potentially cramp revenues. So I do think getting that right balance and striking that balance is critically important.
Absolutely, and I think this is where ALCO comes in. I'm going to come to that because we have one more on the screen from Sujata. She says, doesn't understand the concept of tone from the top. I'm quoting her. I face lots of pushbacks from first line of defense every day, even if management says risk management is everyone's responsibility. So I guess that question is saying it's all very well for the senior management to say it's all about tone from the top and we're all risk managers, but if they don't really do that, then it's irrelevant, isn't it? It's one thing to say it. This is what I've been sort of writing for many years now. It's one thing to say we're all risk managers. It's another thing to actually believe in it and do it. How can we address that problem if management is saying one thing, but the first line of defense don't really think it's their job to be risk managers?
Well, I think that gets back to setting up processes, risk processes that cascade in and are reviewed and periodically reassessed, and having open lines of communications about how that's working. I think the tone at the top is important, but I also think ensuring that throughout the organization, what owning being a risk manager means at whatever level you're at is thoroughly discussed and embraced. That would be my response.
Okay, no, thank you. Now, I've been wanting to bring this up for a while because I have read your chapter, which I think appeared in a collected Wiley text from pre-crash, I think 2006 or something around that time. I tell you why I was such a big fan of it. You referenced the importance of the Asset Liability Committee. I have other than me, I have never come across a CEO of a bank that ever said anything about ALCO. You're the only one. Well, you and me. And I was impressed with that because to me, it's such an important risk committee.
It's so critical.
Yeah.
I mean, I have to tell you, so I came up on the retail and commercial side of the business. And for me to go into an ALCO session and have a better understanding of some of the risks we were taking and kind of some of the transactions that the bank was contemplating and reviewing those was as much an important part as to how I would lead and direct the company as anything. And so, and having other members of the ALCO committee get different perspectives from line managers across the company, it's critically important that you have that group discussion and thinking.
There's an expression in English, in England from the 19th century. You're a person after my own heart. You are so spot on. I would say exactly the same. Unfortunately, I would like to make that. I would love it if that was the view in every bank around the world, because then the system, the whole industry, would be a safer place. Couldn't agree with you more on that. Now, I don't have any more questions on the screen. I wanted to make one more observation. And this is something I've learned just from today's webinar, listening to you speak. I particularly liked your recollection that in the immediate aftermath of finding out about the stress, you actually, from what I could conclude, you followed a hands-on approach. You went out and spoke to customers, you spoke to employees, you went directly face to face and went out there and spoke to them. You communicated early, you prevented the bank run, you and your team, and you went out personally and speaking to customers and employees. I think that's critical as well. I think that too many senior execs I observe, they have a kind of ivory up in the top floor culture, and others are doing their work when it really needs to be turned from the top and really getting down in the weeds and speaking to people face to face. I think that makes a big difference, and I was very pleased to hear it backed up my view that that's what's important, because that's exactly what you did. So thank you for that. I don't have any other questions. Does anyone have any other observations or questions for Susan before we wrap up?
I might just mention another interesting thing is that as the investigation was conducted, again, Eugene Ludwig, who'd been controller of the currency and was basically headed up an organization called Promontory Financial. He felt strongly that basically he had done the early review, came in, and when he said, Susan, you've been mugged, he basically said, thankfully we have you in place now to figure out how to work through this. And because John Rusnak had been there defrauding for 5 years, and again, none of the regulators, not of any of the country, we had federal, we had state, we had Irish, we had UK, nobody caught it. I mean, he was incredibly brilliant and masterful in terms of how he dealt with those transactions. And I would just say that Eugene Ludwig ended up going back to the board. Our former CEO, our former chairman, the CEO of Allied, they were all terminated because they hadn't got it.
Yes.
He said to me, you need to work us through and figure out where we go from here, which is when I put together a group and we really explored what our options were. And I went back to the Irish and I said, I think you should consider. When the Irish, they were ready, this was terrible for them, it was brutal. They were ready to exit. And I said, let's see if we can find a buyer. And we were very fortunate to find a company that wanted to get into the Mid-Atlantic region, Washington, D.C., Central Pennsylvania, Northern Virginia. They just came right in, stepped in, and we never kind of lost a beat, if you will.
Yes, I mean, and that's why it's such a great case study. I mean, I'm surprised I've not read more about it. It's only in very specialist, you have to search for it, but it makes a great case study, and not just the lessons learned in risk management processes, but how to deal with the aftermath. So again, thank you very much for that. Now, we have had just another comment come up here. Oh, thank you very much, Morrow, for your feedback. Morrow has said it's an excellent webinar. Thanks to you, Susan. So our thanks as well from BTRM. Mark Sexton, 10 from the top, the board plays a big role in understanding the firm's risk culture and needs to understand the culture. Absolutely. They can do this with risk culture surveys, metrics, missed deadlines, etc. There are ways to do this. I always think it should be done organically. I'm not a big fan of bringing in an external party to try and understand culture. Really, it needs to be senior execs who would really look to understand what's happening at the coalface. But I couldn't agree with you more, Mark. Thank you for that observation. Now, we are more or less at time. Susan,
well,
I want to
say, may I say one other thing? So, Mark, I would also say it's the culture at the board level is also critically important. You know, what kind of a culture, what kind of oversight, not management, but what kind of oversight is there, and so forth. And I might mention Catherine Allen, who said, excellent overview of risk and controls, is the chairman of the board risk committee. So thank you, Kathy Allen, for joining us.
I didn't know that. Well, you know what? That's a great place to conclude, because I couldn't put it myself. Susan, my thanks again to you. This is I personally really want to host this. I was looking forward to it. Lived up to expectations and more. It's a fantastic case study. There's lots we could talk about that. I would love to see you published more works in that space, you know, a book rather than a chapter. I would love to see that. In fact, we should talk about that. But thank you again from everyone at BTRM. Thank you to our delegates. Thank you for taking part, for your observations and comments. Thank you for joining this BTRM webinar, Certificate of Bank Treasury Risk Management. But as we talk about things wider than that, very important case study here. Susan, our thanks again. Our thanks to the audience. My thanks to the technical support from BTR admin. I will wish everyone a good evening and see you soon. Take care of yourselves. Bye-bye.
Thank you so much to you and BTRM. Thank you.
Thanks. Take care. All the best.
Thank you.